Hey traders, welcome to this week's Forex trade planning session, the show where we look ahead at the opportunities that could be setting up in the Forex markets for the week ahead. Now, last week in the markets, there was definitely some movements. There's some great opportunities there to get into some trades and take profits. And this week could be the same. We obviously had the ECB come out last week and raise interest rates. They also sort of indicated that they wouldn't be afraid to do a little bit more of the rate hiking in the future. So that's something that we need to see how that plays out in this week's markets and how the rest of the traders out there, how they interpret that, which obviously will be able to then give us a clue as to which way the euro is generally going to trade. So this week there are some euro opportunities, but we need to play them quite sort of defensive. So we don't want to be too gung-ho with them because we still need to see how the markets digest that information. Having said that, obviously we don't want to sit on the sidelines when there are good-looking opportunities out there. We don't want to second-guess the markets. We just need to be a little bit more cautious with our opportunities and with the trades that we take. So with that being said, let's jump over to the charts right now. Let's walk through the various markets and the different pairs that could be setting up this week. The first one is the Aussie franc. Now, last week, and I think the week before, I was saying that this sort of market here, it looks very untidy. It wasn't something that I was interested in getting involved in. I also drew this trend line in that we can see over here, and the market has now come down to that trend line. And what I'm hoping that we get is maybe Monday or Tuesday, the market plays with this trend line, and then it sells off and breaks below the support level. Let's bring in the crosshair there. It breaks through the support level at the 0.6532 area. If we can get that, then we'll look to get involved in a trade. Obviously, on the momentum candle, we're not looking to put our stops all the way above the highs here. I've explained that in other videos, but ultimately the FX markets are very different to something like the stock market. So whereas sometimes you can play for those big swings and things like that, often it just makes sense and it's more profitable to go for the short-term momentum moves. That's how I work with members of my community. That's the way that I teach them to make money. That's what I've found to be most effective in the markets. I know that there are people out there, and indeed I used to, place my stops very, very far out. So behind the swing highs and the swing lows, which is okay. It just means that you're going to get fewer trades and you're going to require your trade to have to go further in order to hit your profit target, which makes it that little bit less likely to go on and do that. Whereas if we play the initial momentum and we're using, day highs and lows as our stop losses, actually you don't really give up that much in terms of, the fear that the market is going to just turn around and quickly stop you out. Most of the time, if the market does turn around, it will probably go and hit that stop at the swing high or swing low point anyway. So the idea is that we get into areas, we get into trades where there is momentum. If there is no longer momentum and the market takes us out, that's fine. But it does mean that we get the volume of trades that we take is more, obviously, which is a good thing from the perspective that you're not sat there on your hands. You're not trying to make up trades that don't exist. So you've got to find that good balance. I'm not saying that you want to take lots of trade just for the sake of taking trades. But we all know with retail traders, with you guys sat at home, if you it's unlikely you will sit there for an entire week and not take a trade. So we need to find a strategy that enables you to have that good balance of having the volume of trades with the win-loss ratio. And the way that I trade, the way that I'm teaching you guys to take trades here, the win rate is sort of in the 70%. And in fact, over the past couple of months, as for me anyway, it's been in the high 80s. So it's a way that really works and it's something that, you really should take a look at. So anyway, going back to this particular opportunity here, as I said, what we would look to do is if the market can move sideways, that would be great. Then take a break through the support level at 0.6531. Stop will go above the 2-bar high. So somewhere in this area here at 0.6622, and then go for your 1-to-1 reward to risk ratio. The next opportunity is the Aussie yen. Now this one is going to be a little bit more difficult because when you're taking trades at the turn point. So when you're getting that resumption of the trend, it's easy because you can picture that the market will go on and it will potentially hit new highs. When you're taking breaks when there's already been some momentum in the market, it's a little bit more difficult to do that. But it doesn't mean that it's any less profitable. In fact, these moves here, if you go back and you take a look at this here, or you look at this area here, these moves here, when they do take hold, they're actually very good and they're very profitable. And that looks like what we're getting here. So I'm actually already in this particular opportunity here. If you're not, then I'd wait for another momentum candle. When that momentum candle presents itself, then look to take the buy. And again, use the 2 bar. So we're keeping our stops relatively close and then go for, a target that's 1-to-1. And what that allows us to do, more than just obviously the win ratio, is it allows us to grow our accounts very quickly. So there's this misconception that in order to grow a small account into a large account, you need to day trade the markets. You need to be in and out many, many different times in a day. When actually, if you take a bit more of a passive approach, a laid back approach, but you look at the momentums, you're not looking at the big swings, but you're looking at the momentum from within the swings, you're able to be just as profitable, if not more profitable, than if you're day trading. And you have that same volume of trades, which allows you to build your account up very, very quickly. The Aussie New Zealand, this is one that looks like it could be setting up. So I took a little bit of a loss on this last week, or was it the week before? But anyway, I took a little bit of a loss on this trade. I got long at around this area here. The market then went off towards my profit target. It didn't quite get there. It started to pull back somewhat. And I talked about the fact that you've got the expectation of what happens when you get into a trade. And the expectation when it gets to that point there isn't that it breaks all the way back down. So I took a bit of a loss. And I said that if the market then looks to start breaking up again, I'll reinitiate that trade. And that's exactly what happened on Friday. So we've got the Australian dollar strengthened against the New Zealand dollar. It closed at the highs. So what I would like to see in the Asian session is I don't want to get in immediately now. I want to see a little bit of a pullback and then a break through the highs, and that will be the opportunity for me to get in there and buy the market. The CAD yen is a trade that I'm already in. So I took a break through these highs, through this momentum candle here. Now, I've been in that for a few days. It hasn't quite gone on to hit the profit target yet. I still like it, all right? So it has broken out to new highs. And as I said, it's scary trying to take opportunities from this area here. But I think that if we do get a break through the 110.26 level, then we could see a move similar to this one over here or similar to this one over here. So a good opportunity for you if you're not already in this position. The franc yen, again, is trading towards its highs. It's the same with the Aussie yen and the CAD yen. Obviously, you don't necessarily want to take trades when it's trading towards the highs, but then you have to remember that pairs that are trading towards their highs or their lows are the ones that are the strongest or the weakest. And when we're trying to trade the FX markets, one of the benefits we have is we get to pair a strong currency with a weak currency, which actually gives us a higher probability of success. When most of the markets, they look at things like this, and then they'll sit there and say, oh, okay, now it's going to turn around. And they try and fade the big momentum moves. And what happens is the momentum moves just keep going and going and going. And meanwhile, retail traders, rookie traders, they're losing money here because they're trying to sell into this move, waiting for the turn. And the turn doesn't really happen that often. It's much better just to find the momentum and go with the momentum until you come to a significant level. And then obviously you can reassess the trade from there. If we look at the Euro Aussie, so this one here, this is one of the Euro trades where I said we want to be a little bit cautious with this trade. We're not going to not take it. So I do think that there's an opportunity here. We got a nice bearish momentum candle there. So I would like to take, if the market does open a little bit further up here and then breaks through the low of this candle, I would like to take this short. Stop will go above the 2-bar high, which at the moment happens to be the swing high. So somewhere around here at 149.03, and then just go for a nice 1-to-1 down to around this area here. And one of the great things to do with trading this particular approach is that we don't need the markets to go on and hit, extreme levels in order for us to be able to make money. We can make money even if the market goes halfway down towards there. So if we get a little bit of this move over here, we will be able to book profits and grow our trading accounts, which is what this is all about. The EuroCAD is a similar one, so it's a little bit more untidy, but I think if we get a bearish momentum candle through the 1.2981 area, we can place our stop above the 2-bar high, wherever that may be. At the moment, it's this area here at 1.3185, but wherever that happens to be, you place your stop above there. As I said, we want to keep an eye on what happens at 1.2870. So if you get involved in this trade, you see some profits when it gets down to this level, and then it starts to reverse, it might be a sign that you want to get out of that a little bit early, because we do need to see how the market pays attention at these, the key levels there. But if it just absolutely smashes through, we could well see a momentum move like this previous one here back in June and July. The euro pound is one that I like the look of to the upside. So if we can break above 0.8718, that would be a good opportunity. We need to get the close above that level there. But if we do get the close, that would be a great opportunity. We'll look to buy that. And I think we could well see a nice momentum move up towards the highs. Not that we'll be involved. We will be involved, but it might be multiple entries and exits. But not that we would buy and hold all the way up there. I just think that if we get the break of this level here, we've also got like the big structure level. So you've got the low there, you've got the structure high, structure low, the market. If it breaks through that level, then we've officially got a long-term trend reversal, long-term uptrend, which could see the market push up towards these levels here. So definitely something that you want to pay attention to. If we look at the pound Aussie, so the pound Aussie here, I'm waiting for a breakthrough 1.6862. So this area here, this support level there, if the market can get through that level, I'm looking to become a seller. This is probably one of my favorite trades going into next week from a price action perspective. The reason being is that we got the nice break through this support level here. The market then just pulled back a little bit towards that level. It's sold off again. So it's respecting this area of support here. It's showing that the market is acknowledging it. If we can then get the sell-off from there, then that will represent a very high probability. So that's probably my favorite trade going into next week. The last two trades is we've got a pound yen trade, which we spoke about last week. That kind of initiated. It's still at around break even there, which isn't a problem. I've spoken about this on previous videos here. We're trading the daily charts here, and we can't expect that we get paid, within a day or two of getting involved in the position. Sometimes we might be in a position for a few days, maybe even a week, sometimes a little bit more. Okay, but as long as it's moving in the direction and it's not pulling back like that Aussie New Zealand one that I talked about earlier, then it's not a problem. It's something that you do kind of need to stick with and let it play out. The final opportunity is this one here in the New Zealand franc. If we can get a break below the 0.5863, everything here, we've got a nice big downwards momentum move. We've got that little bit of an untidy area there. The market broke through the structure at 0.5902. And as I said, if we can now get through this momentum candle here, stop above the high, we go for that very nice tactical short opportunity, get in and out, book our profits very quickly. And I think that also with the pound Aussie could be a very good trade going into next week. Okay. So that wraps up this week's trade planning session. Sorry, it's a little bit shorter perhaps than some of the other ones. Obviously, we had some bad news this week in the UK with the Queen passing away. So what we want to try and do today is get down into London, lay some flowers at Buckingham Palace and things like that. So if it seems a little bit rushed, apologies for that. We will get back to the normal show next week. If you're not already subscribed to the channel, and many of you are not, please make sure you hit that subscribe button, hit the bell so that you get a notification as and when I release these videos. Otherwise, I look forward to speaking to you either on next week's trade planning session or when I release another video this week. Okay? Take care now, and I will speak to you all very, very soon. Have a good week in the markets.